Are you sure?
Here's the 30-second lesson on what legends know. Never ask a bride why she's getting married. Don't wear a skirt on a windy day. Deodorant is not a shower. Don't sniff chili flakes. And don't forget, saving is not investing. Legends don't just save, they invest in mutual funds. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
A big story has broken internationally. In fact, it should be the biggest story of the day, also for us in India, because it's so important for us, not just economically, but also strategically, in terms of where we are positioned, what is our relationship with our biggest adversary, our biggest strategic adversary, that's China. What's our economic relationship with it? Are we heading in the direction inevitably and inexorably, I'm saying this with care, inevitably and inexorably of becoming its trade colony? So that's a question we'll come to as we go ahead. The big data point that has emerged this week, and the Chinese are very good with their data. In fact, Government of India is still giving us our export-import data, trade data from October, and we also saw how they messed up on estimating the gold imports by several billion dollars, no less, not a million or two, several billion dollars. That said, the Chinese produced the trade data very quickly. And the trade data they've given us now, they've given the world now, and this is, I think, perfectly timed or maybe mistimed because of the consequences it might have. But it is timed with the eve of Donald Trump's takeover as president in America. We are just about a week away from that. And the Chinese data has come out showing that Chinese trade surplus has crossed the $1 trillion mark. $1 trillion mark. Just think about how much money that is. See this chart, that's the first chart. So what I'm going to do is, I will first share some charts with you and explain some facts, and then go into deeper analysis from many of the readings that we have made, and finally also give you a list of the readings. So if you look at this chart, then you can see year after year, China's export surplus is going up. In fact, if you look at historical data, the last time the Chinese had a trade deficit was in 1993, 31 years ago. Since 31 years, they've been running up a trade surplus. So this data that you see on this chart is from 2005. It's gone up year on year, some odd year here and there, say 2018, maybe 2011. You saw a little bit of decline over the previous year. Otherwise, it's been a secular increase. It's been a secular increase upwards, and now it's come to $992 billion. That's a rounding error to $1 trillion. Also, the data is being updated. So to get the perspective on the size of this $1 trillion trade surplus, we have to remember that India's average trade over the past 3 years or so has been in the ballpark of $1 trillion. That is all of India's trade, export, import, everything included, services, goods. China's trade surplus now is more than all of India's trade. That is what explains the enormity of what has happened right now. So once again, look at this graphic. See how it's going up every year. China produces more and China sells to the world more. It's a different story, and we'll come to that as we go ahead. The China is consuming less and less as time passes. So it's producing even more that it sells to the world. Then you see the next graphic. The next graphic tells you something else. It's a very interesting graphic because this is a month-on-month graphic. That is January to December 2024. Why do we focus on January to December 2024? My colleague TCA Sharad Raghavan, who's our editor for economics, he in fact came up with this nugget because we saw in the American press that the Chinese trade surplus has really jumped in the month of December. Why the month of December? So international media, think tanks, particularly American media, American think tanks said that's because the Chinese really pushed exports into America on the eve of the Trump takeover. That once Trump takes over, he has threatened to impose high tariffs up to 60%, and then it may become more challenging to export. So जितना पॉसिबल है बहती गंगा में हाथ धो लो, या राम नाम की लूट है, लूट सके तो लूट, अभी कर लो जो करना है. So they've been upping their exports, and you can see it in the last quarter of 2024. Again, see this chart and see the last 3 months. I think by October, polls have begun to show that Trump is doing quite all right, that he could actually win. You can see Chinese exports to America going up. November, they've gone up even further. December, they are the highest. For December, China also has the highest trade surplus with America, almost reaching $100 billion. Now, $1 trillion, what does it mean and what are the implications? See the next chart. If you see the next chart, when you do trade, you sell, but you also buy. In China's case, buying has actually been coming down while selling has been going up. So see this graphic, see both sides. Sharad has done these graphics. See both sides. On one side, you see it's a bit scattered here and there, right? But generally, if you see this, and particularly if you then align with the size of China's GDP, as a percentage of China's GDP, China's imports have actually been declining quite substantially. China is buying less and less from the world. On the other hand, on the right side, which is China's exports, which is the darker side, that's where you find a secular increase every year. So China is selling more and more in the world. It's exporting more and more in the world. Its export growth has greatly outstripped its import growth. In fact, it's a misnomer to say it's import growth because its imports have actually declined over the past few years. That is what gives you a more complete picture. Then, if the Chinese are doing so well, and I told you earlier, in fact, I made sort of a peremptory comment that India has to worry about becoming a trade colony of China. See what's happening between India and China. So see China's rising trade surplus with India. Between 2018, we started at just $58 billion. That was China's surplus. Today, it's $103 billion. And this is something that international experts also marvel at. They say that the two countries hardly have any people movement between themselves. The two countries have a very fraught relationship strategically. They have armies lined up, they have strike forces lined up along their disputed borders, and yet India is importing so much from China and is able to export so little to China. I will give you some data on that as we go ahead. So just see this from $58 billion in 2018. Now India's trade deficit with China is $103 billion. And to understand the perspective, this means that India has imported about $121 billion worth from China, whereas we've only exported to them 18 billion. I will show that chart to you in just a moment. So see the chart of what India has been exporting to China. So this chart is very telling. This chart tells you how China's exports to India have surged. 2018, $77 billion to 2024, $121 billion. That's when government of India, Modi government in particular, has been saying make in India, import substitution, Atmanirbharta, etc. But this is a case of, if I may use a Hindi-Urdu metaphor, dard बढ़ता गया ज्यों-ज्यों दवा की. That the more medicine you took, the more painkiller you dunked, the worse your pain became. So from $77 billion in 2018, our imports from China are now $121 billion. But look at our exports to China. That is the telling figure. In 2018, $19 billion. In 2024, $18 billion. It's remained flat thereabouts. Only 1 year, 2021, I'd like to see what happened at that point. It went up to about $28 billion. But even then the deficit was 70 billion. But generally, if you see the ballpark, it is at $19 billion. That's the reason I say that there is danger of India becoming a trade colony of China, because if you further dissect our exports to China, a lot of that will be raw materials of one kind or the other, or things like low value things like shrimp paste, for example. That is the situation with India. Finally, it is not the most important point, but it is still important. While India suffers a 103 billion trade deficit with China, and China exports $121 billion worth to India, India actually is a trading partner, does not matter that much for China. So see this chart. This chart tells you the percentage to which each entity accounts for China's exports. ASEAN is at the top. It's at about 17% or $587 billion. So all of India's trade, if it's about $1 trillion, right? Say about 60% of that or 58 or 59% of that, China simply exports to Southeast Asian countries. Look at the size of China's trade. I'm just using these figures not so we scare ourselves, but for us to understand the power of trade. Because somehow over the past decade and a half, in India, an anti-trade or a trade skeptic mindset has developed, as if trade is not very good. However, for any country to grow, trade is very important. Growth in trade is very important. So if you look at India, India's percentage of China's total trade, that is export-import together, is just about, in fact, it's below 5%. ASEAN is about 17.5%. US and EU are in the same ballpark of about 15% each. See these four reasonably flat lines, three at the top and one at the bottom. That's India for comparison. So once again, India, although it's a recipient of a lot of Chinese exports, is really not so material to Chinese trade. Now we get under this $1 trillion trade surplus. So I take you to the Twitter handle that I use very often, that I turn to very often, and this is an expert that I think the world of, Trin Nguyen. She works for Natixis in Hong Kong, does analysis, was in India recently, also met our finance minister. If you find a picture, we'll show it to you on your screen. And her Twitter handle is Trinomics. Now, Trinomics, she says, first of all, she makes a very significant point to which I will come in a minute. But let's look at the losers in this Chinese trade equation that she points out. Losers means China is building this larger trade surplus not only because it is exporting a lot more, but also because it's importing less. So many of China's trading partners have actually seen a substantial loss in their exports to China. Which is the biggest loser? Australia is the biggest loser at 10%. Australia's exports to China have declined by 10%. Thailand is 5.2%. Indonesia is 4%. Japan 2.6%. And lo and behold, India also by 3%. So as India's imports have gone up from China, or as Thailand, Indonesia, Japan, Australia, all their imports have gone up from China, their exports to China have come down. India is also in that unhappy category. The only country among these major countries which still has a trade surplus with China is South Korea. And you can see why. The reason simply being that South Korea makes chips that the Chinese needed so desperately, also because the Chinese are now the world's largest automobile manufacturers. Americans had lost that position a long time back, but Chinese are now bigger automobile exporters than Japan, than Germany, South Korea, EU, any country. In some cases, some of these countries put together, and all of that requires chips, as do many other things. Almost anything you make these days needs chips, particularly EVs. And those Chinese are exporting from South Korea. How long will that last? We don't know. For quite a bit of the analysis, we rely upon an article by Keith Bradshaw, who's an expert on Chinese trade since 1991. And this is an article in the New York Times, I told you. I will give you a list of readings as we conclude this. So Keith Bradshaw writes, he says, first of all, he looks at this $1 trillion surplus, and then he says this $1 trillion has come when China's own spending is becoming less and less and less because Chinese consumption is coming down. China's exports are $3.58 trillion in goods and services. $3.58 trillion, that figure somehow rings a bell. That's about the total size of India's GDP, right? The fifth largest GDP in the world. China has exports which equal about the size of our GDP. China's imports, on the other hand, are $2.58 $9 trillion, and that's what gives you about $1 trillion of surplus. Or that's what, not you, that's what gives China, not you or me, but that's what gives the Chinese about $1 trillion of surplus. This surplus, again, this surplus has always been there. I told you since 1993. That was the last time the Chinese had a trade deficit. They've always had a surplus. In 2022, it was 838 billion. It's now gone to 1 trillion. And this is despite the fact that the Chinese import most of their energy, their oil and other goods and many other minerals, because even if they make batteries for EVs, many of those minerals are imported. Cobalt, lithium, nickel, etc. Those are imported, and the Chinese are investing in the countries where these reserves are found. So Chinese can also exploit these and bring them back. Again, an important data point from Bradshaw, the Chinese trade surplus in manufacturing goods, trade surplus in just manufacturing goods is 10% of China's GDP. And this, when we are struggling to get our manufacturing up, just their trade surplus from manufactured goods is 10% of their GDP. The highest the US achieved as manufactured goods exports as a percentage of their GDP was 6%. And that was during World War I, when European factories were not producing anything to export. Europe was at war with itself. 6% of GDP as manufactured goods exports is what the Americans had in the First World War. China now has 10%. That puts that data point in perspective. China has been investing heavily in advanced manufacturing. They've invested up to $300 billion. That was part of Made in China 2025 policy, and it is now bearing fruit. So, like I told you, China is now the largest car exporter in the world, automobile exporter in the world. China has also just rolled out a single-aisle, narrow-body passenger jetliner, commercial jetliner. So this is also saying Airbus and Boeing, here we come. So Chinese are moving in all these high-tech areas. China also today makes almost all of the world's solar panels. And if anybody else says, I'm making solar panels in my country or my country is making them, the stuff that goes into them most likely would have come from China. That is like a monopoly. So this whole EV craze in the world, or climate change scare in the world is working almost entirely to China's benefit right now. And that is what Trump is going to address. Maybe he'll do it in his own nutty way by saying there is no climate change. But this is something that becomes an issue for the rest of the world. That does the EV craze, does the clamor or rush to EVs only work to China's benefit? That question cannot be set aside now, because Chinese manufacturing now, China at this point, again this is data from UNIDO, United Nations Industrial Development Organization, China now accounts for 1/3 of global manufacturing, 1/3 of global manufacturing, which means its manufacturing now is more than US, Japan, Germany, South Korea and Britain combined. You can also throw India into the mix. China is still more than that in terms of sheer manufacturing power. And its trade surplus now accounts for half of its economic growth. Half of its economic growth is coming from trade surplus. So once again, we have to understand the value of trade. Chinese decided a long time back that their route to growth was going to be exports, and they focused on those areas. They imported what they needed to create what they could export. It's like Germany. Germany between 1800 to the Second World War, they mostly imported what was needed to build their military machine. Otherwise, they made their factories very cheap, very efficient, and they exported to the world. I will come to that in just a moment. The Chinese also decided that trade was going to be the engine of their growth, but also a kind of a weapon in the global power play. In the process, the Chinese manufacture 2 to 3 times more than their domestic demand, because they know that they'll be able to sell it. Then to sell it, they keep their currency artificially low. In fact, the biggest dispute between the US and China for a long time, and we have to understand this better, Because in India, we have this madness. We have this madness called currency nationalism. That a stronger currency is good. My currency is strong, yes, right? Currency has to have a market price, right? And then a country can play with it a little bit. So while in India, we've been just throwing testosterone at our currency, the Chinese have done the opposite. The Chinese have kept their currency weaker, because if their currency finds its real level, because the Chinese have had a trade surplus for a long time, they have a humongous set of foreign exchange reserves. If their currency finds its real value, Chinese exports will collapse. So Chinese keep their currency weak, and they use that then to export, to make their exports competitive. Now, I see a quote by Nicholas Burns, who's America's ambassador to China. Surely he'll move away soon enough because the new president comes in with his own ambassadors. So Nick Burns said that in all areas, all key areas, steel, robotics, electric vehicles, lithium batteries, solar panels, and the Chinese are manufacturing a lot more than they need, and they are exporting. And he said that this is a big mistake. This is a big mistake because at some point there'll be a backlash. There'll be a backlash from the developed world, but also the developing world and the global south. In fact, if you want to again understand the value of China's export surplus now, imagine the export surpluses the other big powers have had in the past, economic powers. So Japan, the largest surplus the Japanese had was $96 billion in 1993, which in today's value would be $185 billion. So that is less than a fifth of the surplus that China has now. Similarly, if you look at Germany after the global financial crisis or European financial crisis, in 2017, Germany had its highest ever trade surplus, which in today's value would be $326 billion. The Chinese trade surplus is still 3 times as high as that. In each case, when Japan and Germany had their highest ever trade surplus, Japan in 1993, that not coincidentally, but it ties in, that was the last year of the Chinese trade deficit. Japan had its highest trade surplus, and when Germany had its highest trade surplus in 2017, it was about 1%. Each of these surplus amounts were about 1% of the world's economic output. Today, the Chinese surplus is 2%, in fact, a little more than 2% of the world's economic output. Read some stuff also from Brad Stetzer. That's another Twitter handle I follow, and I follow Brad Stetzer's writings also. He's a senior fellow at Council on Foreign Relations. Bradshaw tells us that between 1870 to 1970, America ran a trade surplus. But America was not a power that used trade surpluses as a strategic weapon. So while they had a trade surplus, the highest ever post-war surplus that the Americans had was $12 billion in 1947, which in today's value would be $130 billion. That was, however, at that point, 4% of global economy, because a lot of the world's economy, a lot of the world's countries at that point had their economies moribund because they were all recovering from the Second World War. In the New York Times, I read also a detailed op-ed article by Robert Atkinson, who's president of Information Technology and Innovation Foundation, a think tank. The headline is, "We are in an industrial war. China is starting to win." And he actually starts by complimenting Donald Trump from acknowledging it. And then he says, and I quote from the article, and I quote, "For China, a desire to make money, which is the fundamental driver of trade and capitalism, is secondary. China's primary goal is to damage America's economy and pave the way for China to become the world's preeminent power." And then he says, China is a power trader. And what does power trading mean? Power trading means that you do trading not just to make money, but also to degrade your adversaries. That is the meaning of weaponization of trade. What Atkinson is telling us is that the Chinese are actually weaponizing trade. And then he explains to us how the Germans did exactly the same thing between 1800 to World War II. That is what I had explained to you earlier. Just as the Germans, he said, in that century, 19th century and beyond, up to Second World War, weaponized trade into an instrument of power, of pressure, and even conquest. He quotes from development economist Alberto Hirschman, who says that Germany weaponized trade into an instrument of power, of pressure, and even of conquest. Now, how systematically have the Chinese done it? You see your mobile phones, you see your TVs, you see your laptops, iPads, whatever. Everything has a screen. And now you see televisions all selling you OLED screens. All of these screens are now dominated. The entire screen business is now dominated by China, and they have built this domination thanks to subsidies. What are these subsidies like and how do these work? Now, if you see LCD displays, OLED industries, almost everything comes from China. In fact, the Chinese have 72%, 72% of the global LCD screen market. In 2004, they had nothing. From where has it come? Because the Chinese have been giving their own equivalent of what we call as PLI in India. But how much money? The company that manufactures most of these screens in China, BOE, the company is called BOE, they've got 532 million in state subsidies, which is more than the company's net profits. That's what Atkinson is telling us. Then he points us to a book by Arush Doshi, The Long Game, China's Grand Strategy to Displace American Order. Now, this is having complicated implications. What's happening is that now Trump might go to war with China. If Trump goes to war with China, what might the Chinese do? They will let the yuan weaken. Right? If they weaken their yuan further, that makes their exports competitive, or that makes their exports irresistible for the rest of the world. So even if the Americans really raise their tariffs, those goods will then go to other countries, India included. And the Chinese have been doing it for quite some time. They've been subsidizing their exports, and that is also working to the detriment of the global south, something that the Chinese say they value, and they seek the leadership of the global south mainly by throwing money there as debt. The Chinese never gift you anything. As debt to build infrastructure, BRI initiative, etc. But those countries then will fear that a lot of these goods will now come in at a very cheap price as the Chinese further weaken their yuan artificially. I told you earlier, and I will repeat again, because it is such an irrational thought that India should continue to strengthen its currency. That is, stronger currency is necessarily good for you. Okay, free currency in free fall is bad for you, but an unreasonably strong currency is also not good for you. So the Chinese, if they weaken their currency, it will get worse. I'm sharing with you an article from Wall Street Journal by Jason Douglas, John Immon, and Samantha Pearson that says that if US imposes more tariffs, then China will offload more of these goods on countries in the global south. In Thailand, they point out 1,700 factories shut down from the beginning of 2023 because cheaper goods started coming up from China. US lost 2 million jobs between 1999 and 2011, which means almost the entire industry of furniture, toys, and clothes shut down in America and all manufacturers shifted to China. These various countries, mostly in global south, have taken more than 250 trade defense measures, that is to defend their trade. By tariffs, by using tariffs, anti-dumping duties and investigations, anti-subsidy probes, but nothing seems to have helped. Indonesia, in fact, banned a Chinese app, Temu, which you could use to get stuff sent to you directly from China. So the Indonesians banned that app. Sheikh Hasina in Bangladesh, when she went to Beijing, she pleaded with the Chinese to take more imports from her country because even Bangladesh, much smaller than India, has a $22 billion trade deficit with China. Almost the entire global south, actually the entire global south has trade deficit with China, and they all worried about it. And what did Sheikh Hasina hear in response from the Chinese? They said, yeah, good point. We will buy more from you. What will we buy more from you? We'll buy more mangoes from you. Now, how much value can that be when your trade deficit is $22 billion? Other countries have suffered. In Brazil, in 1985, manufacturing accounted for 36% of GDP. It's below 11% now. And this story has a quote from ArcelorMittal, chief executive of ArcelorMittal, saying, why should I invest in Brazil when almost 1/4 of the steel consumed in this country is imported from China. So why should I set up steel plants here? Brazil is one of the bigger exporters of iron ore to China, and yet it's cheaper for them to import back processed steel from China. So you sell your raw material, China converts it into value-added steel, then you buy it back, it's still cheaper than your domestic manufacture. That is the relationship of trade colonialism. The story also quotes Ashish Bharatram, who's the chief executive of Shriram Fibers, or SRF as it's now called, which is an Indian chemicals company. And he says that, look, the Chinese exports, cheaper Chinese exports are also squeezing profits for exporters. And he says this is their typical strategy to get market share at any price. Final example, Indonesia is now importing between 2018 and 23. Their imports of Chinese toys have risen so much. Their imports of Chinese toys have risen from $400 million to $850 million, and their own toy industry has died out. So once again, what is the upshot? The upshot is that everybody is now scared. China is a big trade superpower. China has weaponized trade to the extent that it's now threatening America. It's basically rolled over Europe. It's threatening America, and all the other countries which are smaller economies, including India, are now worrying about this. It's not just India, it's Indonesia, it's Thailand, it's Japan, it's Brazil. Everybody is now getting worried. In fact, now the global south is getting doubly worried, because if Trump imposes these tariffs and China lets its yuan weaken, it will become even tougher for their own domestic industry or manufacturers to compete with what comes from China. In case you want to understand this issue better, because this is a very significant issue, you will see the readings that I suggest with the description of this video.